Okay, good. This was a trade that I analyzed this morning. Look at what it shared. Look at this now. Look at this. This happens every time, for goodness sake. Every time. Why did I miss this? Ha! Kira Ferris just called the VIX 75 trade. Is it a buy or a sell? Is it a buy or a sell? Is the buy still buying? Or what is it doing? Because I don't know what's going on with 75 right now. Is 75 still buying? I think it's okay. It's just like ranging. She don't chop stick. Ah, voila. So you guys can see it happens every time. Please, sir, I asked if in the supply area it is the same bearish candle we have to mark out. Yes. If it's in the supply area, you have to mark out your bearish candle before sorry, your is it your bearish candle? Oh, I don't know. Your bullish candle before. Okay, guys. Okay, guys. Please. Now, look at this. Look at this. Look at this. Sorry. I'm trying to adjust this. I beg, I swear, I don't come. This I don't come. Okay. Now, see this stuff. I told you guys that your demand level, because now let's do it again. Let's do it again. You can see this always plays out. And also it has saved me from a lot of loss, like a lot of losses. Yeah, it has saved me from so many losses because now I always look out for my confirmation before I enter a trade. I don't just enter anyhow. I don't just like say I want to set limits. Now I'll just be going with blind eye, with faith. Like, okay, let me just set limits. Whatever wants to happen, let it happen. God take the wheel. You dey imagine. So that's what happens when you're setting limits. But I have to learn the hard way. So what did I start doing? I started looking out for my confirmations after learning about supply and demand. Okay, so this is our sweep of liquidity here. This was our transactional liquidity. Then price gave us this swing high, right? Are you guys seeing my screen? Yeah, price gave us this swing high, and this becomes a swing low, which is our protected. Please, if you are seeing my screen, say yes. I want to be sure everyone is seeing this. Okay, good. So price gave us this sweep of liquidity. Let me do this again. Rule number 1 has been met. What next? Rule number 2, structural liquidity, done. Structural liquidity, done. I think I saw this setup around, wasn't it around 6 a.m. in the morning? Because I woke up around 6 a.m. because I left my house 6 a.m. I went out to do one or two things. So then I was not with my laptop and I was busy, so I did not quickly send out the signal. So I did not even take the trade, but it was a clean setup. Now, this was our transactional liquidity. I can put it as TXL. Then where's our structural liquidity? This is our structural liquidity. Why is that first low not your structural liquidity? This first low, I don't consider it as my structural liquidity because it's not close to this low. I want my structure. Remember I told you guys about the 50% rule. I want my structural liquidity to be at least inside this 50%. Inside here, at least. So it was too far for my this thing. It's not the one that your liquidity will be in this thing, island. Your structural liquidity will be in island, while your protected low will be on the mainland. No, we don't want that distance. No, we don't. We don't do that here. Okay? We don't. Please, I know some people I've seen some people mark out this thing like some people have marked out something like yeah. They do something like If you know yourself, some of you are on this table. If you know yourself, better identify now. Oh my God. Oh my God. If you're on this table, please repent. Change. 2024 is near. Change. I see this a lot in the setup session. I'll be like, how far now? I see this a lot. Olayemi, Desmond, all of you now on a day this table. So please, ow, look at this now. Look at this space. Wait till this space there for. Wait till you want use this space there for. You want use our push up. I mean, waiting. Sorry. Pedestrian, I swear. The person say this in a fair value gap. If you're if like this your fair value gap there, bro. You not go fair, I swear. You not go fair at all. What is this? Please let's continue. Let's continue. Let's continue. It's in a fair value gap. Ah, please let me take this out. Let me take this out. Now look at this. That's the reason why I ignored this year. Because now look at all of this drawdown that you face if you are taking your this thing here. Let's assume your this thing is here, right? Look at all of this drawdown. In your mind, price is already going up. I be growing up. Which one I want to talk? See, price don't they do this thing. You don't they happy. You're happy. Price is going up. Ah, price they go my way. Price they go my way. You don't the price your Benz. Price they go my. You know who reach there. Sorry. Price they go like this. The only price do price sweep you out. Then you can't go our way. Share it again. Now so the life just be life not supposed to add. Trading not supposed to add. You get just follow your rules and that's it. Do you miss trades since you don't set limits and wait? Bro, I don't miss shit. From you to you, I be me to me. What was this? You to you. Bro, I don't miss shit. Okay. So far I see my confirmation entering. All right. So that's how it's supposed to be. Okay. So I ignored this low. Yeah, because this low is not a low, it's a high. It's higher, it's too high. Look at this now. This is the closest low. Yeah. Look at this. Now, remember, I'm telling you guys about demand and supply. So let's go on the 5 minutes time frame. Let's see if we have a demand level to take this trade. Now, what happened here? What the price did? Look at this. You see these two last bearish candle before this boom, before this move to the upside. This bearish candle here, boom, then this, right? This becomes my demand level because if you go on the 10 minutes time frame, these two candlesticks become one. Remember, I told you guys I don't use 3 minutes time frame. I don't use the 1 minute time frame for my this what they call it for my demand and supply level. I use my 5 minutes time frame or my 10 minutes time frame. Okay, so this is a demand level on the 5 minutes time frame. These two candlesticks here become one on the 10 minutes time frame. So what will I do? I will mark this out on the 10 minutes time frame. Waiting for price to come and tap into it, then look for my confirmation. This was zero drawdown. Zero drawdown. See, you feel when they stack your trades. They buy till they reach yourself. They buy, they go. Zero drawdown. No retracement. And it just went. It just tapped into it. Look at this. Look at this. This is how you get your sniper entries. Look at this. Now, this is where your confirmation entry comes in. So price did this sell. Then he gave you this, remember, 3 candlestick formation. 3 candlestick formation. Where's the first one? This is the first one. The first one. Okay. The price gave you a sell again. The sell candle again, right? Then what the price do again? Price then gave you this bullish engulfing candle. So far, it closes above this high, above this previous high. So far, it closes above this. You can enter. This is where I always start from here. Bam, boom, stop loss, boom. How do you monitor your trade till it gets to your PY when you have plenty setup? Bro, it is easy. Okay. What I'm looking out for is just a single trade, right? It's just a single trade. I might have up to like 10 setups. Definitely not all of them will enter my entry at the same time. Sometimes I think yesterday I had like 3 trades that got into my entry last night. Step index, V50, and V50S. So I looked for the one that was A plus. You understand? I looked out for that one the most. I watched. So once price is within my PY, maybe it's close my PY, I always monitor the trade or set an alert. But what I do, because I'm always on my phone 24/7. I'm always on my phone. That's why I see that my battery is always low. On I already thought my battery is always red. I always charge my phone. Oh. I always charge my phone. I swear to God, I charge my phone 100%. But once I start using it, it don't enter red because I'm always on it. I'm always active on it. I have over like 100 DMs every day. You get, so I'm always replying to DMs. I'm always multitasking on my phone. So the battery will always run down. I don't like charging and pressing my phone at the same time. You understand? So that is how it is. That's why my battery is always red. Okay? Make I be of it. No worry, no worry. No, yes, now if you have be that now, that's the jazz behind it. Now my own juju be that. Whenever my battery red, I dey eat TP wella. When my battery full, I dey chop stop loss. I don't know why. How do you set a lot on derivative trading view? It will never work. Derivative trading view na low budget trading view. So don't count on it. So guys, look at this. Look at your stop loss, then look at your target. You see, say you don't already they go eat TP. Like this would have been the trade of the day. The trade of the day. See, no need setting your stop loss. And now imagine if you are using sell limits. Sorry, imagine if you are using a buy limit, right? Look how your stop loss will be. This will give you what 3.32 risk reward ratio, right? But now look at this with confirmation entry, your stop loss is here. And what will be your risk reward? 10. Your risk reward will be 10 to 11. So you imagine the reward you go fit dey get on top $20 risk, $50 risk. Ha! Thank you. If I no trade, who wan pay bill for me? Who wan pay bill? House rent na like 1.2 million. Who wan pay bill for me? Who wan pay house rent give me? Knack am. They knack am lots. Naka. Hiro Nakamura. Knack am 100 lots. I pity you. I pity you. So look at this, guys. Look at this. Look at this. 11 RR. This is mind-blowing. See, if you take this kind of trade in a day, you are done. You've made your $500. You've made your $1,000. You're out of the market. What else are you looking for? Okay. So, guys, give me another chart, another trade that has probably played out. Let's look for our supply and demand. V50 sell. You will always see it there. So please note, your supply and demand will always be inside your POI, inside your QMR. Okay? Please, V50 sell on what time frame, please? On what time frame? H1. Okay. I think I had this sell. Wait, has it played out or is yet to play out? Which one? Is it this H1? Is it this one? Mr. Dari is playing out already, right? Okay, good. Now look at this. Let's see if we will see our supply and demand level. Is it this year? Mr. Dari at Alade? Okay, good.
Yeah, it's this year.
Okay. So this, right? So this is our POI, right? So let's see if we can see a supply level on the 5 minutes time frame or the 10 minutes time frame. So where the price starts selling from? Okay, great. Now look at this. You see this massive move to the downside? You see this massive move to the downside? Can you guys see this massive move to the downside? Look at these cells. Boom, 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 boom. Can you guys see? Can you guys see it? Please. Now, there are so many. I think there are like how many demand level? Look at this as well. This could also serve as your supply level. Good. So I think we have how many supply level here? We have one, we have two. So let's see. Which one we'll mark out. We are going to mark out this one definitely first, because this would have been my demand level. So in the supply level, if you don't see your confirmation there, you need to ignore that demand, that supply level. If you don't see any confirmation there, because that will make your demand level and your supply level valid. Okay, please, please. You can see this demand level did not hold. Let's see if we had a confirmation here. I think we actually had a confirmation here, but this did not hold. So what price? What I said before Jesus Christ? Before I speak, grandma, no, Jesus. Ha! What was Price trying to do? That was what I was trying to say. Oh, to teach no easy. Oh. I swear, all these teachers for where teach me for secondary school, primary school, university, bro. They try, I beg, I beg, I beg. Look at this here. We also mark this out because this is like the extreme demand level. Sorry, the extreme supply level. Get off. This is the extreme supply what level. So what happens? We're marking it out. Can we take weeks and what? You say attractive. Attractive. uh, this guy go like woman. I got in on this trade many times. I think I got in on this trade like 3 times, and price stopped me out 3 times. Price stopped me out 3 times. Now, this was the confirmation I would have taken. I took this trade. I took this trade on this supply level. My stop loss was here. Then look at what price did. Price did this. Then what did it do? It took me out. Right? It took me out. But what did it do again? It sold off after taking me out. Then what did it do again? It took me out again. I took this trade the second time. Yeah. It kept giving me confirmation in my POI in the supply level. It took me out the first time because this was where I entered from. It took me out the first time. I entered again, took me out again the second time. Yeah, it took me out the second time. Yeah. It's in the sub now. Ah, ah, what's going on? Oh, I beg, go rest. It took me out, yeah, the second time. Ah, what's in the call? Okay, okay. It took me out here the second time. Look at this. It took me out the second time. Then what did it do? It finally sold off from here. It finally sold off from here. Look at this. Look at all of these confirmations. You can see that on this confirmation entry, the bearish candle is closing below the bullish candle. It's always closing below. That's why it's giving me confirmation to enter this trade. Are you guys seeing? Are you guys understanding about this thing? Confirmation entries now. Once price close below this previous bullish candle, if it closes bearish, I'm mentioning the trade. Are you guys understanding confirmation entries now? You get. Yeah, so please, if you're understanding about this confirmation entry, please say yes. Don't worry, we'll get to stacking. It's always the engulfing candle that ends the formation. It's always the engulfing candle that you get. Okay. So if you had gotten on this trade, you would have gotten on this sell, gotten on this sell, gotten on this sell. But to me, it's not ideal. You just need to take one trade and hold your trade. That's what I do. That's what I do. Okay. So look at all of this confirmation. They are all silly. Jesus, silly man. Oh, they're all silly man. Oh my goodness. Yes, will you target the H1 low? Yes. Yes. That's your TP. Okay. That is your TP. With stacking, you would have gotten 1 to 10 R. Yes, but I like following my rules. I don't like doing just quick scalp, and get out. Because this was the analysis on the 1 hour time frame. This was the analysis on the 1 hour time frame, right? This was the analysis. So if price had gotten all the way down here, I would have gotten out because this would have been my TP. This would have been my TP. This is what 12 hour. This would have been my TP once price gets here. Or if possible, hold it till here. Because sometimes I always swing trades. You get the time I did $20 to 1,000 something. I did swing trading on that. So that's that it is. Okay. So that's me. But if you are in need of the money urgently, you can do those scalps. You can take those 3 trades. Please, is the confirmation entry clear? It's not difficult. I sent out what to look out for, the types of confirmation entries, the candlestick formation to look out for. I always want to hold to full TP and price go reverse. That's the thing. That's the thing. Don't always hold to full TP. Sometimes if I'm up $300, $500, it might be a counter trade. It might be a counter trade because look at all of this right here. Price is just ranging. Price is just ranging, meaning it's not ready to continue selling off yet. But if you had caught this move, yeah, if you had caught this sell from here to here, you'd have been good for that week because this is a good RR for you. You'd have been good. Okay, so please note this confirmation entry. It happens all the time in your demand and supply level. Look at this confirmation entry, first entry, confirmation entry again, second entry, confirmation entry again, third entry. And all this entry needs to happen that's the second rule. It must happen in a key level, which is your supply level or your demand level. It must occur in a key level. Now, you have many confluences. Price has given you your break of structure, your structural liquidity, transactional liquidity, sweep of liquidity. That is number 1 confluence. Number 2 confluence is price is in your POI, your QMR, right? It's in a QMR. That's your breaker block. Second confluence. Now, inside of your breaker block, inside of your QMR, that your POI, go down your lower time frame again. Look out for your supply and demand. Okay? That's another confluence again. So this is what will make your trade strong. This is what will make your trade powerful. Okay? This is what will make your trade A++++. Okay? All of these confluences. You have your sweep of liquidity, your structure, your transactional liquidity, your structural liquidity, your your price taking out structural liquidity is now in your POI. So now in your POI, you look for your POI inside that your POI, which is your demand level and your supply level on the 5 minutes time frame or the 10 minutes time frame. So once price is there, look for your confirmation. Look for your confirmation. Okay, if you don't see your confirmation if you don't see any of all these candlestick formation, this 1, this 2, this 3, If you don't see it inside your supply and demand level that is inside your QMR, don't take that trade just yet until you see it. Are you guys getting me? Don't take that trade just yet until you see it. The confirmation is the bearish candle. Waiting is on the type. The confirmation is the bearish candle. Must close below the bullish candles. Yes. Yes. It must close below the bullish candle. If it is the other way around, the bullish candle must close above the bearish candle. That will give you a confirmation entry. Okay, guys, USD CHF. I can't remember last time I opened this thing, but let me check sure. What is the confirmation forms after the supply? See, now, good question. If the confirmation forms after the supply level, like maybe above the supply level, and the bearish candlestick closes back into the supply level, that trade is still valid. Now, look at this. Look at this right here. Look at this. I'm on Sabi Forex. It's your name, Strong Sharp. Are you getting my points? Look at this. Let me clean all of this. So look at this confirmation. We have how many minutes left? Now look at this confirmation, right? You can see that this is the supply level. This is supply level here. And price went above your supply level. But what did it do? It closed back inside. Price went above supply level. Right? But what did it do? This bearish candlestick closed back inside. It closed back inside, meaning that okay, this price closed within our this thing, supply level. Now, if you go on the 1 hour time frame, 2 hours time frame, you see that this is just a week. This right here is just a week. This is just a week on the higher time frame. Okay, guys. So this has given you confirmation that okay, price is still within our supply level. So let's enter. Okay. Someone said we should check what V50 10 minutes buy. 10 minutes buy. Let's check it out. Live. Let's see if it's a live trade. 10 minutes. Okay, I think this is what you are seeing. Me, what I'm seeing this strip of liquidity here, right? I'm seeing this swing high, right? I'm seeing the structural. This is how I trade basically, guys. This is how I trade basically. So let me show you guys. I've seen this. I've seen this sweep of liquidity again, this transactional liquidity. So this then becomes my structural liquidity. Now remember, I told you guys 50%. It's up to 50%. It's more than. So this is valid for me. Let me mark it out. Please, can you guys see this? I'm doing this this live this thing. I'm doing it live. This analysis, I'm doing it live. This then becomes my was protected low. Right? This then I will still come and do another setup here because there's still a setup here, but I want to look at this first. Now, Shebi, not on a normal day, we'll wait for price. We have 10 minutes left. Shebi, we'll wait for price to come and tag us in with our buy limit here. Right? Stop loss is here. But now, let's go on our this thing, 5 minutes time frame to see if we will see a demand level. Yes. Let's see. I feel this is a demand level. Now, mind you, this demand level has held like twice. It's held the first time, it's held the second time. Okay, this demand level held the first time and the second time. This is a demand level. It's held the first time. Yeah. It's held the first time. It's held the second time. Yeah. So a demand level can hold up to 3 times. A supply level can also hold up to 3 times. How about the scenario where the market moves past this protected low how can we identify a demand level where the in your protected low, I'm sure there's a demand level there, probably on the 3 minutes time frame. Okay, probably on the 3 minutes time frame, but I don't like using the 3 minutes time frame because I don't trust it. So price might come here, tap into this place because this is a strong demand level. This is a strong demand level, right? So let's check this out. Let's check this one out. On the 5 minutes time frame, we have another setup here. We have a sweep of liquidity here. So remember, guys, whenever price comes into this demand level, if we don't see a 3 candlestick formation pattern in this demand level, I'm not taking that buy because this is a setup I will send in my signal group. If I don't see a confirmation, I won't take this buy. So I must see a confirmation. It is a must. It is a do or die affair. If I don't see it, I'm not taking it. You get? Okay, now this is a protected low because this swept liquidity, right? Then price gave us a transactional liquidity. The price did this again, right? Price gave us this low. This is the closest low to this protected low. Have you now? So this is 5 minutes. Let's draw out this low here. So what's price likely to do? This is our POI. Our QM, what? Our QMR. This is our QMR. 1 minute, guys. Hello? Oh, yeah, no, I'm gonna check. Okay, guys, after this illustration, I think I'll be done. Now, look at this. This is the QMR here. So, on a normal day, you are anticipating price to do this. Put your buy limit here, right? Then price should buy. Right? The stop loss will be here. Let me take this out. Do you always do top-down analysis for all your trades? No, not all the time. Most time, I might just go on the 5 minutes time frame, or I might just go on the 15 minutes time frame, and I'll see a confirmation, and I will enter the trade without doing top-down analysis, without going from my daily to my 5 minutes. You understand? So I don't usually do top-down analysis all the time. Like this, I did not do top-down analysis. I just went on the 5 minutes time frame, on the 10 minutes time frame, and I did this. So now, where is our demand level? Who can tell me where our demand level is in this zone here? I'm waiting. Where's our demand level? It's easy to spot, guys. It's easy to spot. The last candle. Good. 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 This becomes what? Our demand level. This last candle in the POI, which is your extreme order block. So this is your demand level. Oh, let me make it yellow so you guys can see it well. Hello, Alpha. You know, say in drive the display sometimes, so I'll check. All right, guys, you guys are actually start to get this. Now, this is the extreme order this thing. What do I call it? Now, this is what I do on my chart every day. Now, I'm waiting for price to come inside this zone here in my POI. Everybody say yellow. This guy is weary. You are weary. Nasu. If they find yellow, go Rema concert. All right. So what's price supposed to do? Price should come here, give you a confirmation, yeah. Life, they don't take out too serious, so why not go like play? They don't take life too serious like that, too, bro. Chop life, enjoy life as much as you can. So, guys, this is it. We are waiting for this confirmation entry here. Okay? So once price gets here, what are we looking at for once price gets here? Who can tell me? One gala for whoever gets it right. And one bottle of Sprite.
Oh, we are looking for a candlestick pattern.
Oga, type in the comment section. You don't hear gala, you don't hear sprite. We are looking for
Bullish
candlestick.
engulfing, bullish engulfing.
Oh, no, 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 sir, now. I beg. Now, what's the year? Gala and Sprite, they start the answer. Now so, now so. But I like the fact that you guys are actually understanding this. So that's
We
what we want to
define
look out for. Pizza tops, bullish engulfing candle, shooting star engulfing, whatever, morning star, evening star. That's what we want to look out for, guys. Okay. So this is a setup. Let's look out for it. Let's see how it plays out. If I don't see any confirmation, I'm not taking the trade. Okay. So guys, I really appreciate your time.
I
Please, I have a question. I have a question, please.
Sorry,
I have a
I
question. I
sent
want to
one
ask it like please.
what's your question?
Most times, price gets to that POI and leave like a double bottom on 5 minutes. And maybe if you enter on the first tap on the first leg before it to reverse again to create a second leg, it will hit you out. I don't know why it has happened to me several times.
Yeah, some kind manipulation is just I don't know. It happens to me too sometimes. It happens to me too sometimes. So I don't know. I can't really explain why, but I just feel it's manipulation. I just feel price is not ready to move at that moment in time. Sure you get like price never ready to move, so it just do all those unnecessary drama. You understand? So that is it, guys. I think that will be all for today. So please, your assignment, go on your chart, mark out your demand and supply level, and in your demand and supply level, mark out your confirmation candlestick pattern on your demand and supply level on the 5 minutes time frame in your POI on the higher time frame or any time frame of your choice. just submit whenever you can. Submit whenever you can, please. Okay, but that's your assignment, guys. Mark out your demand and supply level inside your POI, the one that has played out before. Give me 10, 5 for sell and 5 for buys. Is that okay? Because I'm going to be ending the live now because I'm heading out right now. Please submit whenever you can. Okay, guys. It was great having you guys on here. It's always a pleasure. I really love you guys so much. Please make everyone proud, not just me. Make your family proud.
When you go buy that
Make your girlfriends proud. Make your side chick proud. Make your baby mamas proud. Make your sugar daddies proud. Make your sugar mamas proud. Make every freaking body in your life proud. Okay, 2024 is gonna be a blast. A blast. Okay, 2024, all of us must tear bands. Now, good night, everyone. And lastly, make mama proud. Bye. All right, are we complete? We are just 30. Okay. So please let's continue. I've already started recording this session. So I want us to treat top-down analysis, like I said earlier in the previous session that we have. I mentioned that top-down analysis is basically just analyzing your chart from the higher time frame to the lower time frame. Can you guys see my screen, please? If you can see my screen, just put in the chat box yes, and I will continue. Can you guys see my screen? Yes, fantastic. So we want to do a top-down analysis on V25, right? We want to do a top-down analysis. We know that when I start, no consider us. I don't know say on they go mosque now by this time. Oh, I beg, no vex. Like I'm not really always chanced. I tend to be very, very busy. I tend to move around a lot. I tend to move around a lot because I can't keep saying that I'll move the class to this, move the class to that. No, it doesn't work that way. It's only when I am opportune I take advantage of that. Like I'm currently at home. I think for the next 1 to 2 hours I'll be at home. So after 2 hours I'll be heading out until probably 10 p.m. if I get back. So that's just the reason why I just my time is not fixed. You understand? My time is not fixed. It's whenever I am chanced I do that. Okay. So we are looking at top-down analysis on V25. We notice that always on the road, bro. Man, guys make money. Sure you get. Always on the road, man. You know the vibes. So we noticed that V25 has been on a buy trend for quite a long time. Quite a long time. The daily time it has been on a buy trend. But I want to send something. You guys check your what do you call it? Check the general group, the discussion group. I'm going to send the monthly time frame on the MT5 because right now we don't have monthly time frame here on this thing, on the chart. Yeah, we don't have monthly time frame, weekly time frame. So I'm going to send the monthly time frame breakdown of V25. I'll send the monthly time frame and the weekly time frame. Then like that, then we'll continue analyzing like that. Now I've just sent one. You guys check the general section, monthly time frame. Please, if you've seen it, please comment yes. Let me know that you've seen it. Has anyone seen it? Seen. Please comment. Okay, yes, comment in the Zoom session chat box, not the general. I want to know the people that are active on this call. So now I'm going to be explaining it. This is what we have on the monthly time frame. On the monthly time frame, we have something like this. We have price giving us a lower high. Are you kidding me now? We have a lower high, sorry, a lower low. We have a lower high, right? We have a lower low again. Then price gave us what? A lower high again. Then what the price do? Price broke down and gave us a lower low. So we can see that on the monthly time frame, V25 is on the is on the downtrend on the monthly time frame. Okay, so after this, what are we expecting? We're expecting a lower high, right? We're expecting a lower high. So this is what V25 has been doing. So now, if you draw, because now this is the current price action on the monthly time frame from this swing high to this swing low. So we know that on the monthly time frame, we're expecting a downtrend. Please just be observing the this thing I sent, the screenshot. So now what did I do? I saw that okay, price is rejecting, price is creating a wick around this zone here. Around this zone, price is creating a wick around this zone. If you guys can see, right? Then I did my Fibonacci. I drew my Fibonacci from year to year to know if price is at least within 50% retracement. You understand? Then I noticed that okay, price is reacting from this 0.618% level. It's a retracement level on your Fibonacci. This is where price is reacting from currently. Right? Price is currently reacting from this place. Are you guys seeing my charts? This is top-down analysis now. Are you guys seeing my charts? Let me get both. Yes. All right, just go. All right, let's continue. Let's continue. Please, is this clear? Is this monthly time frame analysis clear to you guys? Huh? Let me continue. Is it clear? Okay, good. I want you guys to respond so I know who I'm always following. Okay, so if it's not clear, I can explain again. So now price is within this zone on the monthly time frame. Quite all right. Price is within this zone. It's a gold, they call it the golden ratio or the golden level. Well, okay, if price starts rejecting from 0.618% level on the Fibonacci, is likely to continue. So price has given us a lower high, a lower low, lower high, lower low, lower high. But yeah. But lower high, lower low, lower high again. So what are we expecting after a lower high? What are we expecting after a lower high?
Lower low.
Okay, let me mute you guys again. We're expecting a lower low. We are expecting price to do like this, to continue its direction to the downside. Abi now? Perfect. So once price gets here, we're expecting a retracement here. So what do? Let me send the weekly time frame now to you guys. Let me send the weekly time frame. Then we'll continue on the daily time frame here. This is the weekly time frame. Look at what I drew out on the weekly time frame. It's still sending. But look at what. Oh, my network is terrible, guys. Okay, sent. Are you guys seeing? Look at what I drew out on the weekly time frame rather. You guys can see a supply level. Price is currently reacting on a supply level. Yeah, you see where I marked out a green zone there. Can you guys see? Please, if you can see it, say yes. Let me know you are following. Can you guys see? Only okay, yes, good. Price is currently reacting from that supply level, that green candlestick. There's a green candlestick here. Oh, sorry. It's still the same thing now. It's still the same thing. Sorry. Let me see. It's still the same thing. Let me send you the weekly clearly. Sorry, I sent you guys the monthly. There's still a supply level on the monthly where price is currently rejecting from, right? And now this is the weekly, guys. This is the weekly. Can you guys see the weekly now? Okay, good. You guys can see the weekly, right? Okay, nice. Now you guys can see that there's a supply level there. That is a green candle that price is currently reacting from. Okay, remember what I told you guys in the supply and demand. Okay, let me quickly send the link, the general group link again. So please, you guys just join because I'm going to cancel this link in a couple of minutes. So if you know you're not in, better be in now. I'm sending it now. All right, set. So now you can see that price is currently rejecting, like price is selling from that supply level. Okay, so what are we expecting price to do? We're expecting price to keep falling to create a lower low. Now let's go to the daily time frame here on this chart. Let's go to the daily time frame. This is the daily time frame. Can you guys see this daily time frame here on the chart? Can you guys see this daily time frame on the chart here? Please, I want you guys to follow up. Are you guys seeing this daily time frame here? Okay, good. Now, remember what I told you guys that whenever price gets to your supply zone or your demand zone, what are you expecting? You're expecting a candlestick formation. Abi now, like a 3 candlestick formation. Yes or yes? Okay, good. Now you see this candlestick formation. This is a confirmation on the weekly time frame that okay, price wants to do what? Price wants to go down. This is a evening star or something like that. Price wants to go down. Let me write it out. This is a confirmation. This confirmation entry. Confirmation entry on the daily time frame. This is it here. This is a confirmation entry on the daily time frame. So you know that okay, this will be your entry. Then price, we are targeting the higher low. Sorry, yeah, the lower low. We're targeting this. So we know that okay, price is supposed to do what? Price is supposed to sell all the way down here. But remember, we cannot take our entries on the daily time frame. It's not possible because the drawdown will be massive. So what do? We scale down to our 4-hour time frame. Abi now. Abi, are we going down to our 4-hour time frame now? Because remember, this is a top-down analysis from your higher time frame to your lower time frame. Only like 2 people are responding. And besides, it was only 2 people that submitted assignments yesterday. Just 2. And on our one buy Benz next year. Come on, guys, you all should take this seriously. Okay, I know we all know this stuff. Majority of you already know it, as you claim, since you don't want to do assignments. Yeah, now all these kind of people where we say for square, now then they back seats. now they back seats for school. You don't know. Okay. All right. So now in this confirmation entry, let's go to the 4 hours time frame to see. No wahala. So now what are we seeing on the 4 hours time frame? Or let's use the 8-hour. Let's see. What are we seeing? Okay, let's use the 8-hour. Now we have gone from the monthly time frame to the weekly time frame to the daily time frame. Now we are on the 8-hour time frame. So what are we seeing on the 8-hour time frame? We know that okay, this is a confirmation for sell, but inside that confirmation, another confirmation they inside. Una dey get inside that confirmation, another confirmation they inside. And what's the confirmation? We have a sweep of liquidity here. Thank you. Inside that AVR, another AVR they inside. Una, see, I will give on a certificate after I graduate from this mentorship. These are bright students. Like Ona get sense. You guys have sense. On God, I swear. Ona they follow up. That's how it should be. You know, there should be this mentor-mentee relationship, guys. You know what I'm saying? Who be that one? I beg. Don't worry. I go do giveaway for all of. I will do giveaway. No worry. Now we have what? We have a sweep of liquidity. So this becomes our sweep of liquidity. Now, what's the second rule? After a sweep of liquidity, what are we expecting? A break of structure. I need professional term. I've taught you these things. I need a professional term. I gave you the terminologies of all these things. So please, someone tell me, after a sweep of liquidity, transactional liquidity, fried rice and chicken. I will give you fried rice and chicken. Don't worry. But wait, why human being go just decide say in name, in username won't be fried rice and chicken? Why? Why? Bro, of all names, of all nicknames to name yourself, now fried rice and chicken. I swear, see, your name go work for you this month. You see this festive period there? Your name go work for you well. Just, just go ahead and tell say, what's your name? Fried rice and chicken. God, no worry, I know you want fried rice and chicken. All right, transactional liquidity. Thank you. So, where's our transactional liquidity? This right here is our transactional liquidity. Trader B. Trader B. This is our transactional liquidity. We have what? Our transactional liquidity here. This is it. That's our first break. So this I becomes what? This I becomes protected. Meaning that, okay, price is not supposed to come here to take this out. Is that right? Price is not supposed to come there to take this out. Now, what is transactional liquidity used for? Somebody tell me. Anybody will get them. Anybody will get them 5K. Going.
Correction.
Instacart, send me your account number. Wait, Instacart, are you Nigerian or you are South African or you're Ghanaian? Yeah, Nigerian. Nice. Send me your account number. You say we come and play. Oh my God. Correction. Thank you. Now, after a transactional liquidity, what do we have? We have this correction right here. This becomes our correction. Okay? So, after this correction, we add another what? Transactional liquidity. That gave us what? What does this give us here? Messi, Adetimi, send me your account number. 5K for you. Messi. Are you a boy or a girl? You be man, or be a woman? Eh? You be man, or be a woman? Woman, hey, Messi baby. Structural liquidity. Thank you. No, they carry first class for school. You see all these kind of people, and then they carry first class for school. We have structural liquidity. Thank you. Messi Lambo, I forgive you Lambo, but you know I don't get money normally, so you just manage the 5K, sure you get. You know the thing they be. All right. So now, what are we expecting after structural liquidity? This is the last 5K. Continuation. Who first say continuation? Li. Lee, I mean, Chung Lee. Now, which one? How do we pronounce it? Lee. Okay, Lee. Before continuation, what do we have to expect before continuation? After price gives us a structural liquidity, what are we expecting next? Before continuation. To be taken out, praise Ugochukwu. Thank you. To be taken out. B is your structural liquidity, and structural liquidity must be taken out. Okay? If it's not taken out, there will be no continuation. Shy, hey, see your math, 5K. 5K call. You say, Baba say now, 5K. You be thief, you're a big thief. Praise, you're a thief. You say now, 5K. Oh my God, that's that. I beg, man, I don't give a headache for this group. I beg. Okay, good. Now, we know that this is where our entry will be, right? This is our entry. Now, we want to focus on this POI right here. We want to focus on this POI right here. So what do? Let's go on the far time to see if there's anything there that we can look out for. Now, this is top-down analysis. I've told you guys about what do you call it? The monthly time frame, the weekly time frame, the daily time frame, for 8-hour time frame. Now we're on the 4-hour time frame. Okay, so what I was saying on the 1-hour time frame, nothing really. It's just a blank space. So let's go to the 2-hour time frame. This is top-down analysis from your highest time frame to your lowest time frame. Now in this 2-hour time frame, I can see a supply level here. Has this supply level tested? Okay, this supply level has been tested. So let's see if we can get something there, because now this is too wide. All these places are too wide because price might come all the way up here. Price might come all the way up here, in fact, before it starts selling. Okay, price might go all the way up there. So what do we want to do? We want to keep breaking it down to the lowest fraction. Okay, for those that did mathematics in secondary school, in primary school, you can remember how they always call it. Is it? I don't forget. I don't know math then, but I know there's lower terms, lower someone please remind me. Something lower time something. I've been a low term stuff. I had LCM. Taufik, you go school. Taufik, you went to school. LCM.
Lowest common multiple.
Lowest common whatever. Lowest common multiple fraction. I don't know. But something. You break it to the lowest term. That is what we are doing basically. We are breaking this to the lowest term. You get? Before we get our final answer. So step by step. Okay? So I can actually see this is the 1-hour time frame now. I don't want my chart to be too rough. Let me take this out. Now, this is our POI, right? Now, in our POI, we're looking for another POI. Now, mind you, regardless of this being our POI, this green zone, all of these also serve as POI. From this green zone to this eye, to this protected eye, they're all POIs. So we're looking for supply levels around here. On the 1-hour time frame, I can also see a supply level here. There. This is also a supply level. So price might come to like test all of these places. This is also a supply level, but it has been tested. So I want to focus on the ones that are not been tested. So price might come all the way up here. All the way up here or here before it continues selling. Okay, so let's see what we have again. Let's keep going down. 30 minutes time frame. What do we have? There's so many imbalances here. All these sell-offs, there are so many. Okay, now I think I can see a supply level here that has not been tested. Can you guys see the supply level here? It has not been tested, and it's in our POI on the 30 minutes time frame. It has not been tested yet, and it's directly on above our structural liquidity, which is this. It's directly on above it. Okay, so price might just do this. Come here. they start selling off. We don't know which one would hold unless we see our confirmation in that supply level. Okay, remember these are our POI. So we want to be looking for sell entries in this POI. Okay, now let's go to the 15 minutes time frame. Let's see what we have there. On the 15 minutes time frame, we can see a sweep of liquidity. Look, guys. Hey, forget I bad. Are you guys seeing the sweep of liquidity? You see where I can't hide? It was hiding inside that supply level. Can you guys see? So this then becomes a protected eye. Look at this. This then becomes a protected what? A protected eye. Inside that AVR, another AVR there inside. This is that POI they hide inside this POI. You can see this. This is the 15 minutes time frame. Now, if you keep going lower, because now this gave us a sweep of liquidity, which is this. So this is our supply, remember. Sweep of liquidity. Then what the price give us again? Price gave us a transactional liquidity here. Abi now. Now let's go to the 10 minutes time frame. We are going to see our structural liquidity. Let's see if we are going to see our structural liquidity. I think we have a small baby structural liquidity here. Just normal BS, you understand? Just baby structural liquidity. Yeah. Just normal BS for yeah. We have a baby structural liquidity there. Okay. Let's go to the 5 minutes time frame. Of course, now we'll make everything look simple now. It's months of hard work. Months and months of hard work. So guys, we have 10 minutes left. Let's utilize it well. Okay, now we have this structural liquidity. I want to use this as my structural liquidity. Then we also have another break of structure again here. So what are we expecting? We're expecting price to come and take. Now remember, this is on the 5 minutes time frame. And on the 5 minutes time frame, we want to look for our supply levels. Now, look at the supply levels we have. We have this supply level. Yeah. Let me just extend it to here. Let me make it yellow. Everybody say yellow. Say yellow. Oh my God, that year. Everybody say yellow. That guy gave me vibes that last time. I was like, damn, sharp guy. Yellow. That's so my G. Now, look at that supply level on the 5 minutes time frame. We have one supply level. We also have this supply level here. All these supply levels they have not been tested yet. This one they asked me how I did. What I did? I've been 16, no reason now. I've been 16, I swear. Sweet 16. I just clocked my sweet 16, man, no lie. Sweet 16. All right, we also have this. All of these are all supply levels. So price might actually sell from all of these zones. Messi, you be 9. If I'm not bad, dude. But not bad. No learn where you say anyhow. You be 9. Me, I be 16, you be 9. Oh, they run and they go like that. She gets. All right, now look at all these sexy supply levels. You can see, guys. So now let's go to the 15 minutes time frame. Let me sip this water. Okay. Now you can see how we went all the way from monthly time frame to the 5 minutes time frame. My send first for what? Nobody what? Make me sweat. Make me make me lose my breath. Make me water. Make me water. Make me sing. Make me water. I must listen to this jam. This one just come my head now like this. Let it be that name. Tyler, Tyson. Which one? Well, see, Tyler. Tyler Water. Tyler Water. I mean, when I finally listen to this jam, so Tayeko Kendini.
Yeah, I guess we can do that.
Hey, man, at time finish. Man, at time finish. You don't consider me. Love my Hey. Eh, eh. Ah. Take me to paradise. Ah. Oh yeah. Make me sweat. Make me water. Make me lose my breath.
Make me water. Make me sweat. Make me water.
Make me lose my breath.
Make me water.
I don't. I just have part I want here. So guys, can you see? Can you see this? Can you see this? Can you imagine say now on a normal day, yeah? On a normal day, look at this. On the 4-hour time frame, there are some people who trade limits, just basically like just set your limit, okay? And then their entry will be somewhere around here. Let's assume price goes all the way up here. Take this structural liquidity out and then sells from here. Now look at the risk reward ratio. Look at the risk reward ratio. Normally now, trading gas interesting normally now. And look at see your stop loss, your ideal stop loss will be above this protected eye. Now let's assume you want to target here as your TP. Where is the closest low? Let's assume you want to target. No, that's too far. Let's assume you want to target somewhere around here as your TP. You can see your risk reward ratio. Your risk reward ratio would be 2 to 25. 2 to 25. Okay? But if you are taking the entry with a confirmation entry on the 5 minutes time frame, now imagine this. Imagine this. Your stop loss is around here. Your stop loss is above your candlestick formation. Let's assume your entry is here. Your target is all the way down here. Your stop loss is above the candlestick here. Now let's go to the 30 minutes time frame first and then the 4-hour. Then you will see your risk reward ratio will be mad. Target is here. Your target will be here. Your ideal target. That's like 8.3 risk reward ratio. 8.3. If your SL is here, your risk or more this risk reward ratio. Sorry, I think I have this somewhere around here that was 2 point something sharp. Let's say it's 2.61 if your stop loss is here. But if you are trading with a confirmation entry, your stop loss will be around here. That would be like 14 RR. That's 14 risk to reward ratio. So if you are risking like $20 for that trade, times it by 14. 20 times 14. 20 times 14 is what? I don't know. So someone please tell me. 20 times 14. Boy, I love you more than the sins I be. Or be like now all of us know Sabi Maso. Let me be Thank you. 280. Your stop loss will give you 14 risk reward ratio, which means if you are risking $20 on that trade, you are making $280 on that trade. Now remember, you've not even started. You just opened one single position, risking $20. Now imagine you stack on that trade. If me normally on a normal day, if I'm stacking, or if I'm stacking with a $20 account, I'll be making up to like 1,000 plus. 1,000 plus, nothing less than $1,200 with a $20 capital. Do you guys understand? So that's just it. Bounce all day, bounce all freaking day. Okay, that's how it is. I remember back in November, I was making not less than $1,000, $2,000 every single day because market condition was good. Test that position is like, share you get. Thank you for the calculation. 2,800. That's what I told you. Nothing less than $1,200. Nothing less than if you are stacking. And me, I stack up to like 20 positions, 50 positions. You understand? So that's just how it is, guys. I think our time is up, and this will be our last session for this week. I hope you all enjoyed it. I hope you all grabbed something from it. I hope you all grasped something from it. Okay? No, don't worry, the stacking, we've not treated stacking yet. Don't worry, we'll treat it probably in the next session. Okay? So guys, please go have some fun, have good quality time with your family this period, and enjoy yourselves. Okay, take some time off trading for a while and then enjoy yourself. There must be fun. All right, good day everyone, have a lovely day. You can ask your questions in the question section, please. Fried rice and chicken. Have fun, guys, have fun. Which one be touch us? Ashawo, first name Ashawo. You are Ashawo. Can you send data? It's in our stacking. All right. Hope you guys enjoyed your Christmas, Sha. Hope you guys enjoyed your Christmas. I did. I took a break. I took like I think I went to my parents' house, my family house per se. That was where I spent my Christmas. I think I went on the 24th, 24th, 25th, 26th. Today is what, 28th or so. Yeah, I just go back last night. So back to business. Okay, back to business. Just a little recap. We've treated basic market structure, we've treated the advanced market structure, and also I'm really impressed with some people. Some of you guys, I mean, you all are already doing wonders. Majority of you, although some are still struggling, like some are still trying to, get a hang of the whole thing. I mean, it's not complex, you understand? But I get that not everyone is a fast learner, okay? Or just like me. If doing like a online mentorship, I mean, if I'm paying for an online mentorship and I'm doing the program, I won't really grasp that quick unless I'm with you personally one-on-one. That was why I paid that huge amount to Dax, so he could teach me one-on-one physically. You understand? I want to be seeing you do it in my presence. I want to be able to ask you, okay, is this how you do this? Is this how you do it? What do you do here? You understand? That is how I learn fast. And it just took me 1 week, just 1 week. Like I've not been profitable since 2018, 19 till 2023, June, July. I wasn't profitable. But August, what was this? But August, just that 1 week program that we had together when I went to see him, that was just all I needed. And that was when my story changed. You understand? So everyone has a different learning process. You get that's just how it is. I've seen a couple of results that I'm impressed with. It shows that you guys are actually getting the hang of the whole thing. So we'll be rounding up very soon. very, very soon. I want us to treat these two last classes this month before January. Maybe then we could like start another batch, but you guys will see, follow suit definitely, since it's like more like a lifetime something you get. So stacking. Now, a lot of people do not really understand the term stacking. What does it mean? It's like it means it's basically just opening multiple positions on a trade. And some people have asked me, why am I opening many positions on a trade? Why not just open like one single position or two? And the answer is simple. When you're opening multiple positions, you tend to use the lowest lot size. You tend to use the lowest lot size. So in order to prevent your trades from being closed immediately. I don't know if you understand, because whenever you're stacking with the lowest lot size and you've stacked to maybe 50% of your total margin, what happens is if the market wants to like give a little retracement, you'll be in some drawdown, and that drawdown will not affect all of your positions. It will just close like maybe let's say 20% or 30% of your positions that you opened. But if you open just a single position, just one position or two, market tend to close you out at once because you are in huge loss already. That's why you see margin call red, everything red. You have balance, equity, margin, everything is showing red. That's margin call. You get once MT5 detects that, or I don't know who is in charge of that. Once they detect it, they'll just close your trade. You understand at once. But if it is in multiple positions, if you are stacking in multiple positions, market will close some of your positions, but not all of them. Do you understand? Not all of your positions. It's just close some and leave the rest to run. Okay, and it's advisable because personally, if I want to stack positions, and I said okay, I'm getting in a drawdown. Now I'm not in a drawdown, and I need to close some positions so that it won't affect my equity, so that my trades will not get closed faster. I will just simply close the ones that are the one that I opened late. You understand? Maybe in one position I'm down -$1, and in another position I'm down -$2. So I will close those positions and leave the one that is not in a massive drawdown. Are you guys getting? So that's the whole idea of stacking. And also the major reason for stacking is so that you can be able to flip your account easily. That's why you have your confirmation entry, so that you can be able to flip your account easily. Now, is this your confirmation entry that will grant you what should I use? What should I use? It shall give you easy flipping with your confirmation. Now, let's take for instance, just look at my screen. Let's take for instance, you have your setup normally. Yeah. You have a setup normally. This is the model that we use. This is the model. And your entry is around here. You want to enter here when price takes out this structural liquidity. Imagine on a normal day, this is where your ideal stop loss would be at. Your ideal stop loss would be here, above the protected eye. This is if you are not using confirmation entry. If you are not using confirmation entry, this is where your stop loss would be. Because there might be drawdown all the way here. You might see some drawdowns here, around here. The price will get here and then sell off. That's why you're setting your limit here and your stop loss above here. Then you can see that your risk reward ratio will be what? 3.52. Now imagine if this was your entry. You enter somewhere around here. Let's say price give you a confirmation here, and then this was your entry. Yeah, this was your entry. Yeah, and your stop loss is above the week that gave you a confirmation. This will be your risk reward ratio, 15.64. So imagine if you're opening one position on this trade. So imagine if you're opening just one position on this trade here, where you set your limits and your stop loss is here. Let's assume you are risking $100. This should give you what? From year to year should give you like $300 profits, like I said the last time. But if you are taking confirmation entry year and your stop loss is above the candle, above the wick of the candle that gave you that confirmation, you should be up at least $1,500 from your stacking or more. It should be more because you are stacking now. Because if you are taking one position here with $100 capital, if you open $100 position here, the profit share will give you 1,500. Now imagine you start all the way here, open like 5 positions. 5 positions is too small. Let's say open like 10 positions, because me, I open up to like 50, 80. Imagine you open up to, if it's me that open a position here and I owe till TP, I should be up at least $5,000 from a $100 account. You get. But if you are playing it safe, you are just starting out with stacking, you don't really know how it works out here. You just say, let me try my luck. Let me open like 5 to 10 positions here. Now you can times that. That is like 1,500 times 5. What's that, guys? What would that give you? 1,500 times 5. Remember, guys, I don't know mathematics, so please help me out. That's 7,500. So you can see 7,500 with $100 account. Now, mind you, most of the time, it won't even give you, like, there will be zero drawdown once you enter the trade. Once you have a solid confirmation for that entry, for that trade, there might be zero drawdown, which means that trade is safe. The next candle that just goes down like this, the next candle that you just see here like this, boom, we just give you like, let's say like this one will just give you like $200 first. They just start falling. I've had a trade like that before. Zero drawdown. Do you open the same lot of the? Yes, it's all the same lot size. It's all the same lot size. Okay, the minimum, like you want to use the minimum lot size for the trade to open your positions. Okay, I mean, you guys have understood what confirmation entry is. Now, is at that close of that confirmation entry, you want to open as many positions as possible. Now, mind you, there's what we call, in your MT5, we have what we call the balance, we have what we call the equity, we have what we call margin, we have what we call free margin. You get. So whenever you have a balance of like, let's say $100, you want to ensure that you are using the lowest lot size. Let's say the lowest lot size for V10S is 0.5. That's the lowest you can go. On V10, it's still 0.5. Yeah. So if you want to open a position on V10S, you are using 0.5, right? You're using 0.5, which means you're opening how many positions? 0.5. What that is 1, 2, 3, 4, 5. 0.5 times 5. That is 1, 2. That is 2.5 lot size. But you don't want to open that 2.5 lot size at once because it's more riskier than when you're opening it in different positions. You get, because if you open it once, the tendency of it being closed immediately is higher than when you open multiple positions. You understand, guys? So whenever you're stacking, who is this? Whenever you're stacking, please note this. This one is a very important stuff. That's why I'm being serious right now. You know, say me, I did play normally, right? But this stacking of a thing, yeah. If you don't get it right, it might mess your account up. It might blow up your account. Then you just say, okay, you just keep getting stopped out. Then price just goes your way. You'll be frustrated because I've been there before. Many times. That's happened to me many times. So let's say, for example, now, let's use a chart example instead. Let's use a chart example instead. So you get what I'm saying. Confirmation no hard now. You say the confirmation they had me. You know hard, bro. This is your confirmation here. Okay, see, just watch. This is the daily time frame, right? Let's do this. Price took out this liquidity. Hey, I won't be able to come this far. Which recent? Please, someone tell me which recent pair hit TP recently. Which pair did you analyze that gave that hit TP recently? Anyone, guys? Let me look at it so I can show you V10. Okay. V10. Okay, V10, I think I gave out, right? I think I gave out the signal. Yes. This trade, God, this trade messed me up. This is what I'm saying, guys. This is a perfect example. Fuck. Okay, now, I think I had this analysis this morning, but that was not with my laptop, and it was so annoying. Now, let me show you something. Sweep of liquidity. So, guys, for those of you that are new here, that don't understand the advanced market structure, okay, this is how it is. This is how it is. First things first, we want to look at your sweep of liquidity, which is the most important thing. Your sweep of liquidity. Now, we have a sweep of liquidity here, which means an area where a previous low, a previous high that got taken out. So this was a previous low here. Market took this out, right? That means the sweep of liquidity after giving us this structural liquidity. Sorry, this transactional liquidity. Now, after a sweep of liquidity, the next break we want to see, is a break to the opposite direction where the sweep of liquidity happened. Okay, so that sweep of liquidity gave us our protected low, which is this. Meaning that, okay, price is not supposed to come below here. That is the rule about a protected low. It means it is protected. It means that price is not supposed to come back there to take it out. But sometimes price might just pick it out a bit and then move to the upside. So after this transactional liquidity, this is a break of structure. We call it a transactional liquidity. We always have a correction after this transactional liquidity. This is the correction right here. Right? We have this correction. So what did that correction give us? It gave us a structural liquidity, which is this, to be taken out later. This structural liquidity must be taken out later. Remember, guys. Now, if all of this does not meet your rule, just leave that trade. One, you want to have a structural, a sweep of liquidity. One, check. You want to have a transactional liquidity. Two, check. You want to have a structural liquidity. Three, check. Right? You want price to come and take out the structural liquidity. I'm sorry, I said liquidity. Liquidity. Check. Then what are you expecting again? You want price to come and tap into an area of demand or a supply. Now, where is demand here? Who can tell me where the demand is here that price came to tap into? Is it here? Is it here? Is it here? Who can tell me where the demand is? Someone tell me. Tell me where's the demand. Is it here? Hey, don't draw my this, just use your mouth and say it. Edith Young. Thank you, my brother. The last candle before, thank you. The last bearish candle before the push. I've told you guys, that is your demand level. Now, why did price, Shebi price did this? Why did price not just start selling from here? Sorry, start buying from here. Why did price not start buying from here instead? Because there was no demand level here for price to tap into. There was no demand level here. What am I doing? Sorry. No demand level here for price to tap into. So what did price do? Price went to target this extreme demand level, which is this last bearish candle here. This is your demand. You can see what price did. Price came all the way down here. Now, this is what I always say always happen. Price might give you, this was a confirmation to enter this trade. Price might give you this confirmation, right? You think it wants to go up, then it will come down, right? Then do rubbish again. You think it wants to go up again. But I don't consider this a confirmation. But this was the final confirmation. So that's why you don't want to go all in. You understand? Maybe you want to maybe you have like $100. You might just risk $50 on the first confirmation. But if you get stopped out, you might see another confirmation, which is this. Now, imagine this confirmation. There was zero drawdown on this confirmation. Imagine you have stacked your full generation net worth on this confirmation. Zero drawdown is a safe trade. Stop loss to be here below this week. Zero drawdown. Look at this. Look at the candles now. See, price did not even wick it out. Safe. Price did not even say it wants to retrace here. Then boom. No, as you just gave you this confirmation, this bullish candlestick. After this one, after it engulfed this, you just started going boom, boom, boom. So even if you have gone full margin on this trade, you'll be in serious profit right now. You should be in serious profit. That's beauty about confirmation entry. But imagine now, look at the TP. This should give you 6.54 risk reward ratio. Now imagine if I had set my limit here, my buy limit here, my TP here. I would face all of this drawdown, and possibly get stopped out even if I put my stop loss here. Possibly get stopped out. Now they feel me. Sure you get. Possibly get stopped out. Look at all this unnecessary. You go just dey panic. Like you just your heart go there do bim, 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 bim. You see price come here. You say, hey, thank God. You can't do bim, bim, bim. Price will come here. Hey, thank God. You can't go back. Bim, 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 bim. This your heart go dey race for here. Then, but just imagine say you just dey on cool. You just relax. You are waiting for your own confirmation. Once you see that confirmation, you are enter the trade. Zero drawdown, no unnecessary drawdown, no heart attack. Yeah, nothing like that. No unnecessary drawdown. Price just went one hand. One hand. So you get now. It's not as easy as it might seem because this comes with a lot of emotional roller coaster. You get that's why you need to learn about psychology, risk management. Very, very important. You understand? So for those things they don't understand confirmation, this is your confirmation entry on a demand level. You get, I took this trade, but it stopped me out here because this was the first confirmation I got. It stopped me out. It took out this week. It stopped me out. I wanted to enter again, but I did not have extra funds in my derivative, so I just didn't bother to take it because there are many opportunities in the market. You get many. So now this is where your stacking comes in. At your confirmation candle, once you see that your bullish candlestick has engulfed this candles, this doji candle or an AMA candlestick, that's where you want to stack your positions. Now, when it comes to stacking, please note, when it comes to stacking, yeah, you don't want to go full margin. I would not advise going full margin. How do you stack with a $20 account? It's simple. If I have a $20 account, most of my flips, it's on $20 accounts. You get. If I want to stack on the $20 account, I make sure I open positions till I see that my margin, you look at your margin. Like, where's my phone? Let me see. So guys, check your phones, check your MT5. Check your MT5. You see that you have oh, it's not written there unless you're in a trade. Okay, we have what we call balance, equity, free margin, right? But if you open a trade, let me open jump 100. That's the lowest distance I can. Okay, I just opened a buy on jump 100, right? Now, what am I seeing? Balance, equity, margin, free margin, and margin level percent. Okay, once you have seen this, you want to, and your balance is showing $20. Okay, if you're up in profit, it will reflect in your equity. If you are in loss, it will reflect in your equity. If you're up $10, your equity will be $30, right? If you are down $10, your equity will be what? $10. But then there's what we call margin. Is that margin that we want to pay attention to? Make a screen recording when you are stacking. Don't worry, I will make a screen recording. That is not a problem. I will show it to you guys. Okay, so now is that margin we want to focus on? Please have in mind that you want to focus on margin. All right, you want to focus on margin. So if, for example, you have a $20 account, you want to stack with the lowest position, lowest loss size possible. You want to open positions till your margin says how much dollar. Let's say $10. Yeah, that's 50% of your balance. Margin, not free margin. Margin. Okay? It's not free margin, it's margin. So if you have a $20 account, because if you notice, if you look at my posts, most of my this thing, profits that I've posted, you notice that okay, if the balance is like $20, my margin is always like $10, $8. If I want to go full margin, you see my margin will be like $19 or $20, but that is very, very risky. The higher the margin, the higher the risk you are taking on that trade. But the higher the risk, the higher the reward. Like the trade that I did, that I took $30 to $1,000, right? Where is it? It's here, somewhere around here. I put it in profits. Okay, this should be it. I think on the 4th. Okay, on the 7th, on the 8th, guys. Now look at this. Guys, go to profits in the profit section. Go to profits in the profit section. Are you guys there now? Go to December 8th. I posted this thing, a $20 to $1,000 or so, something like that, where I wrote record broken. Are you guys there now? I want to be sure that you are seeing what I'm trying to explain. Yes, okay, good. Now you can see why I did that figure to $1,029, right? Now look at the balance. The initial balance, the one on the left side, just ignore that one. The main balance, because I added more capital to it and I added more positions. Now, the balance here states that it was $39.29, right? I had $39.21 as my balance. I wanted to fund $40, but I was left with $39.21. So what happened? I opened the position. I think I opened up to like, how many position? Was it up to like 50 or so on this V251S trade? Then you can see the equity. Sorry, you can see the margin. The margin is 25.70. Sorry, 25.57. Look at it well. 25.57. Now, this is a very risky trade that I took. Okay, but I had a confirmation to take that trade, but I took that risk. You get. That was how I was able to do this figure. You understand? But the safest margin that I would have used, let's assume this is a $40 account, because it was $40. I closed one position. Check the general group, guys. It's there. It's a $40 account, but I closed one position, so in loss. So that gave me 39.21. So it was a $40 account. I was supposed to use like at least $15 margin. $15 margin. You get that would have been the safest option for me. You understand? To avoid, once there's drawdown, my account can still be able to, withhold. You can still be able to withhold the old drawdown and stuff. So you can see how many positions I opened. There was so much. 1,029 divided by 22. Let me see. 1,029 divided by 22. I opened 46 positions on this V251S. Now imagine how risky that was. If I had the slightest drawdown, this account would have been gone. Do you guys see? Because the higher your margin, the more riskier your trades will be. But though I will show you guys a screen record of how I start positions. I'm always looking at the margin. So I'm always like tapping. I'm always like, tapping it buy, until I see that my margin is up to at least 30% or 40% of my total balance. So if, for example, my capital is $20, I want to stack. I want to keep pressing buy, keep pressing until I see that my margin is around $8 or $7 to play it safe, or let's say $10. Do you guys understand what I'm trying to say? I want to be, I want to take this one serious, because this is where the main thing is. Because you can easily blow accounts when stacking. You get, so you want to make sure you are stacking with the right positions. You don't want to use over leveraging. You don't want to use full margin. Because whenever you use full margin, you definitely see margin call if there's a drawdown. But if there's no drawdown, you are made already for that day. Because that profit will be crazy. Do you guys get my point? So if you have, I just blew account trying to stack. That is how it is. Now you want to ensure that your trade is valid before you even think of even stacking. You want to ensure that okay, your analysis is correct. You have a confirmation on that trade. You cannot stack without confirmation. Okay? You can't stack without confirmation. If you don't have a confirmation, don't stack. That's just the simple truth. You blow your account. So just don't stack. You want to stack when price has told you that, okay, it's time for you to stack. It's time for you to enter this trade. That is when you want to stack. Without confirmation, I won't advise stacking. So you can't stack without understanding how to, use your confirmation entries. Okay? So that's just how it is. Please ask questions if you have. This is more like a theoretical class, not really a practical class. Can we still enter this big stem buy with confirmation? Good question. Now, please note that whenever price has left your confirmation entry, forget about that trade. Honestly, that's just the simple truth. Forget about that trade. Now, this V10 is still ranging within the confirmation. It's still ranging within that confirmation. If it gets back to that confirmation entry, you can still enter, right? But you also ensure that it gets back to exactly that confirmation entry. Yes, you must always use the lowest lot to stack. If you are using big lot size, you can't stack using big lot size. I remember when I tried when I wanted to stack on V75, I went to use the wrong lot size to stack, and I was going to risk how much for that trade? $200 for that trade, because my target was I think my target was I think $3,000. I was going to make $3,000 on that trade. So what happened was that I used the wrong lot size. Instead of 0.005, I used 0.05. So I was not like, what was going on? Why is my account in minus $150 already? You get? Because all my mind was that I supposed to be at least, even if I'm in a loss, at least $20 max. So you get, so the trade, everything stopped me. Like all my capital was gone, 200 gone. And the next I knew, I knew, boom, market went to my direction. I was so pissed. I was so frustrated because I was like, if I had actually used the right lot size, I would have been in massive profits. You get? So it was so painful. You understand? Because now you tend to be in drawdown faster. Another reason why I say stacking with the lowest lot size is this. If, for example, look at my screen. If, for example, price has given you a confirmation here. Price has given you a confirmation here. Now, and price is doing something like this. And price is doing something like this. Price did not just go once, boom. What did price do? Price was still falling down small like this. Now, that is how I stack. I want to be entering as the market is still giving me, after this confirmation, maybe price is giving me a small retracement, like a week rejection here. Maybe price is coming down a week all to this place here. I want to stack all this way. Then before you know, boom, market will just go to the upside. You're in profits. But imagine you had opened all of your positions here, all of your big lot size positions here. Then market did this. Once market gets here, market will stop you out. That's a stacking for you. It's risky, but it pays. That's a stacking for you. Okay, so if I'm seeing if I see my confirmation and I'm seeing small drawdown, maybe price is just creating a week here to continue. I'm taking buy here, buy. Then before you know, market will recover and go up. You get? So these are the little things we want to put into consideration. We just don't want to, choke head anyhow. After a confirmation candle, should we wait for the next candle to close before we start? After this, your confirmation count, this is where you want to start. Once price has closed above here on the 5 minutes time frame, this is where you want to start. And please note, it's always on the 5 minutes time frame. Always on the 5 minutes time frame you want to start. Don't go and start on the 15 minutes time frame. Don't say you see a confirmation on the 15 minutes time frame and you go there to start. No. And please don't start on the 3 minutes time frame. Don't start on the 2 minutes time frame. Don't start on the 1 minute time frame. Is there any exact amount of positions to open depending on you? Any amount? No, listen, see, focus on your margin. Always note that your margin should be at least 30% of your total capital. So if you are starting, if you have a $10 capital, you want to start to your margin says $3 or $4. Okay? The remaining margin that is left, the remaining money left is to accommodate your drawdown. You understand? Is to accommodate your drawdown. So please don't how do I say this? Don't overstack. All right? Please don't overstack. It will help you. But should we take the trade whenever we see the setup, or we should go with the trend? Because I noticed you open your chances. Thank you. Most of the time, yeah, I don't do top-down analysis. Most of the time. I might just go to any chart now. Wait, let me see how I trade basically. V10S. Our time is almost up. Okay, V25S. Okay, I just opened V25S on the 5 minutes time frame, right? This is how I trade. This is how I trade, guys. On the 5 minutes time frame. Boom. 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 This is just how I trade. This is how I trade. Then what? Put my shot too. Boom. Boom. Then what? Send signal. That's it. This is how I trade. See, I don't really do top-down analysis, but when there's need for it, I will do it. This is just how I trade, basically. This is it. V25 1S sell. You can put your entry if you like. If you want, you can set your this thing. Look for a supply level here. Take an entry. That's it. That's just it. I swear with my life. Even like film. See, once you are able to see it, you can never unsee it. I swear. So guys, this is it. I didn't even bother myself coming to come and check top-down analysis after. I just came and I did this, and that was it. So guys, our time is up. We'll definitely have another session again this week. Okay. We go do psychology, don't worry. Later, guys. Juju, pure juju. I don't go with Babalawo.